Wayne, many thanks for your time as always. A really great beginning to the week after the Easter weekend on the local bourse. Over 1% to close off the markets day. Talk us through some of the catalysts that we saw making an impact on the local bourse.
Well, look, I think it's really driven by what's happening overseas. And overseas, there's extreme worry about the rising long bond rate and rising inflation. But over the last 2 or 3 trading days, the long bond in the US hasn't gone up, and that's given great support to markets. And we've seen that overseas and certainly in South Africa today. So we were up right across the board, led by resource shares. Resource shares were the strongest today. So Anglo American, Anglo Platts, Glencore, BHP, all up between 2 and 3%. And that's on, as I said, the changing global sentiment, but also commodity prices have gone up quite strongly again today. Gold hasn't done much, but platinum's up 2%, and unfortunately, Brent crude's also up 2%. On the downside, the only real significance are our 2 biggest shares, Prosus and Naspers, both down between 1 and 2%. So it's quite unusual for those shares to go down when the rest of the market's going up. But other than that, it's literally just almost green across the board.
What about the rand, Wayne? A little bit of volatility throughout the day. We saw some positivity in early trade, and then it weakened throughout the afternoon. Is this a stronger dollar? Are there some other factors?
Look, the rand more or less ended up where it started, and of course the rand's done extremely well. I mean, if you think of what the rand did last year during the lockdown, I mean, it's been quite phenomenal actually. The rand's now more or less back where it was in 2016. So the rand hasn't actually weakened for 5 or 6 years. I mean, it's been very volatile. It's been up and down, but it hasn't weakened for 5 or 6 years. And that's actually quite a good showing for the rand. I mean, our own personal view is that at 14.50, the rand's slightly overvalued, but, nothing materially so. But in an environment where the world's economy is going to grow very strongly this year, it's going to more than catch up everything it lost last year. That's good for emerging markets. It's good for commodity producers, etc., just like South Africa. So the rand could actually stay stable the whole year.
And we'll get to that global growth outlook a little bit later on in our conversation. But I want to start with PPC. They're being investigated by the JSE for insider trading. And, of course, this relates to that agreement with lenders in its unit in the DRC, the restructuring of the debt there. And it's raised some eyebrows in terms of the conduct.
Yes, very much so. But we'll have to wait. I've also learned in circumstances like this, you wait for the investigation to be over and announced before you speculate, because quite frankly, the market, we don't know all the details on this.
Right, let's get to that IMF a global growth forecast that was mentioned earlier today. They're saying that the global economy will grow by about 6%, but emerging markets not going to be benefiting as much. So, Wayne, I'm just wondering here, how crucial will that vaccine rollout be in emerging markets like South Africa so that we are able to meet those growth forecasts?
Well, look, unfortunately, the rollout in emerging markets of the vaccine is just going to be slower. But we will all get there and understand the markets have looked right through the virus. They quite frankly ignoring the virus because the vaccine's here. It's just a question of time. And, even if it takes 3 months longer to roll out overseas, what's 3 months in the valuation of the share market? It's very, very little. So the market, quite frankly, the whole virus effect on the share market has gone. And then on the economy, I mean, the global economy only shrank 2% last year, 2.5%, and it's growing 6% this year. So it's almost, it's at least catching up twice as much as what it lost last year. So we are in for an incredibly strong global economy, and even locally, even though we are not going to catch up the 7% we lost last year, we're still going to grow by about 4.5%. And 4.5% growth off last year's low base is actually, it's certainly better than what we've seen for many years at 1.5% growth.
Brilliant. Wayne Mccurrie, as always, many thanks for your time this afternoon.